So the JPMorgan Global Growth and Income Trust offers clients exactly what it says on the tin. The scope for long-term capital growth through a best ideas stock-picking strategy alongside the certainty of dividend payments. It was in response to the huge appetite for income from investors that the board of JPGI introduced the new dividend policy last year, paying out at least 4%, set at the start of each financial year in quarterly instalments. Crucially, and this is really important, there were no changes to our underlying investment process. We continue to pick the best ideas, sourced from over 70 career research analysts who are based from Tokyo to London to New York and who follow a valuation framework which is tried and tested and has a very successful track record which spans over 20 years. It's so important to stress that I'm not working on my own here. We're a big, broad, global partnership. Since I've started managing the trust in 2008, we've had the freedom to invest anywhere in the world, in any sector, regardless of size, and regardless of other factors such as value and growth. Being a global investor in this framework allows us to be really agnostic about where a company happens to be listed. All we do is focus on the underlying business and drivers of earnings. For example, we like and we hold Ferguson plc, it used to be called Wolseley, which is obviously listed in the UK, but its fortunes are determined substantially by what is happening in the building and construction markets of the US. We also hold Prudential plc, primarily because it offers long-term, multi-decade growth. Much of it is driven by Asia, but crucially, we get it at great value domiciled in London. Conventionally speaking, we're overweight UK, but it's bottom up, it's stock specific, and it's not driven by any compelling macro insight. On a sector basis, financials represent really good value. Let's look at the US. A company like Citigroup has rehabilitated. The balance sheet is strong, it's extremely well positioned to benefit from a strengthening global economy and gently rising interest rates. Its focus on cost is intense and the stock is cheap. Significant capital returns to shareholders represent an important catalyst for us. Other sectors where we find value include industrials, in particular names like Stanley Works, aka Black & Decker in the US, and Daikin in Japan, which is a world leader in air conditioning systems. I would also mention metals, and in particular steel, where we're seeing a very propitious combination of strong global growth, powerful supply reduction in China, and the emergence of a group of managers who are far more shareholder returns orientated than they have been in a generation. And I would particularly highlight companies like ArcelorMittal and Outokumpu in this regard. From a regional perspective, with profits improving worldwide, we see a supportive environment for equity investing, particularly for pan-European equities, and that's where we're overweight. European companies are delivering, finally, on a long-awaited profits recovery, and earnings are growing for the first time in 6 years. Our analyst forecasts, and these are our analysts, their forecasts are for double-digit earnings growth globally in 2017 and 18, and this seems very much on track. As a colleague of mine remarked recently, This is no head fake. You should expect stock picking to drive performance in a strategy such as this. And that's exactly what's happened over the last 12 months. In particular, some of the more cyclical areas such as banks, capital goods, transportation, basic industries have driven the outperformance. The flexibility that we have in the trust has meant that we could lead into these areas where we were finding really exciting opportunities, particularly during Q1 of 2016, when markets really were very fragile. And we were not forced into some of the crowded, high-yielding parts of the market, many of which look expensive. So the share price appreciation for the trust speaks volumes here, as this trust has moved from a double-digit discount to a small premium today. The trust offers many investors the yield they're looking for in a low-yield world without the need to compromise on long-term capital growth.